When Bitcoin is hitting one all-time high after the next, the question is, does it make sense to take some profit? In the end, crypto is not just about buying low, it's also about selling high. If you don't want to live through a 70% crash, we sometimes have to sell. The question is, does it make sense to sell now? Or at what point does it make sense to sell? We are trying to approach this question by looking at mathematical models. Models that used to work pretty well in the past, that might work in the future. No model is perfect, of course, but some are useful. Now, let's start off with this. How much are the short-term holders in profit relative to the price volatility? So when there's a lot of volatility, we can afford a bit more to be in profit. When there's less volatility, then just a little bit of profit should already raise red flags, right? Then we should potentially already sell. And so that's the short-term holder market value to realized value Z-score. This is a long-term chart. It starts in January 2015, so 10 years of data. And when we are at the bottom, it makes sense, at least short-term, to sometimes pick up that bottom. When we are at the tops, it might make sense to sell. Now, in the last 4 years, we never went above one standard deviation above the market value to realized value Z-score. We always hovered around this level. Now, when Bitcoin got closer to 100K, when it moved from 90 to 100K, the short-term holders were quite massively in profit. Now, even when hitting new all-time highs in the price, the short-term holders relative to volatility aren't yet at those elevated levels. So this would indicate that we still have some way to go. People that come from the traditional finance world have a hard time valuing Bitcoin, because when we value other financial instruments, let's say stocks or let's say property, the way we value those, the way we determine the price is by looking at the future cash flows, right? So a company is worth whatever kind of future cash flows it will generate, and then we discount those future cash flows to the present value. We can do the same for property, right? We estimate what will be the future rental incomes, and then whatever that is discounted with a certain rate to the present gives us the current price of that property. Now with Bitcoin, we cannot do this because we do not have any cash flow. I think the best way to value Bitcoin is just using psychology, as in if the market in aggregate is currently in a lot of net unrealized profit. So if a lot of people have currently a green number on their screen, then those people might take some of the profit. Now, if the market in aggregate is currently in losses, if the price went down a lot and most people see a red number, but they do believe in Bitcoin long term, then the selling pressure might slow down. And so I have a look at this. This is a net unrealized profit and loss. This vertical black line shows when the market is completely in balance. And when in aggregate people are in losses, it's historically a great time to buy. It always has been, so that's true after the minor collapse in 2018 when we went from 7K to 3.5K. It's true during the COVID crash. It's true when FTX and Celsius and Three Arrows Capital collapsed. Of course, when Bitcoin is hitting new all-time highs, that's not the case. But we can also use this the other way around, right? We can see how much are the people currently in profit. And again, if we just take the recent past, we are not yet at the levels that we saw when Bitcoin was at 72K or at 100K. So even though the price is higher, the net unrealized profit is lower. In other words, people have already realized quite a bit of profit. The market is not as heated compared to those prior peaks. There is more room to grow. Now again, we can have a look at the same data just for the short-term holders. So if you're not interested in the overall macro, if you actually want to trade a bit more actively, looking at the short-term holder data of course makes more sense. But here again, even the short-term holders are not that much in profit yet. The market was way more heated when we were at 90K or at 72K. The price is higher, but again, the net unrealized profit of the short-term holders is not as high right now. Now, the interesting thing is that a lot of different indicators that measure different things still tend to give the same kinds of signals. So they tend to flash red at similar points in time. They tend to flash green at similar points in time, even though completely different things are measured, as in number of transactions or net unrealized profit and loss or activity among short-term holders versus long-term holders. All of those kinds of things tend to flash green and red at the same time. And so here we are, we've got a few models. We've got the market value to realized value. So that's how much the market is currently in profit profit relative to the volatility. We've got the SOPR, so that's the spend output ratio, a transaction indicator. Then we've got the Puell multiple, which measures the momentum of the market. How quickly is something going up and down? And we've got the reserve risk. So this looks at mining relative to profit realization. And have a look at how similar those curves go up and down at the same time. Now, when a lot of those models are very high, this aggregate indicator signals a cycle top. When a lot of those indicators are low, we get this blue area, so a potential cycle bottom. And again, interestingly enough, even though we have come all the way from 16K to 110K, we are not yet in cycle top territory. The reserve risk and the Puell multiple are still quite low. So what's then a realistic selling price? At what point in time might it make sense to take first profit? Have a look at this. Here are on-chain original price models. We've got the coin time price, the balance price, the delta price, the true mean, the realized price, the vaulted price, and again, the market value to realized value z-score with a standard deviation of 1. All of those are on-chain metrics. All of those give us certain trading ranges. Now let's focus at the top. So we're only looking at the vaulted price and the market value to realized value z-score with a standard deviation of 1. This tended to work quite nicely in the last 3 years, and this gives us a potential ceiling of somewhere between 120 and 128K. with an increasing tendency. So it depends how quickly Bitcoin is going up. If we are suddenly rallying tomorrow, it might make sense to already sell at 121K. If we creep up over the next weeks, we might have a bit more potential upside. Yes, the price is creeping up, but it's not going up super fast. The market is definitely not yet heated. It's not like a lot of new people enter the space. The pi cycle top indicator measures this. So it looks at two moving averages that coincidentally give us the number of pi, and it indicated the cycle tops quite nicely during those 3 cycles. So whenever there was a cross, there was also the cycle top. So the short-term moving average crossed the long-term moving average. Now this was retrospectively, this was fitted, but this cycle top over here was not retrospectively. This was actually a prediction, and it worked incredibly well. It was only wrong by a single day of what the actual local bottom was. Now again, we are currently very far away from the crossing of those 2 moving averages. So currently it does not seem like the market is very heated and we have to panic sell everything. Here again, some interesting pricing bands. In the top, we could go up to 143K, but probably it might make sense to already take some profit at 125. Here's the same for the short-term holders. The top, according to this model, is at 123. So really, it doesn't seem to matter too much what model we are using. They all provide us with the picture that we have still some more way to grow, but they also tell us that we're likely not going to go to 200 or 300K very quickly. It likely makes sense to take some profit at 120, 130, potentially 140K. But at that point, at least medium term, it probably makes sense to take some chips off the table and potentially put this into something more stable. Now, after so many years in crypto, I think there's only 2 strategies to make money in this market. It's either trying to find altcoins very early, potentially using wallet tracking, buying things before the masses do. And while this is a strategy that can work, it's also comparatively risky. Things like Virtual Protocol or SPX 6900 went up massively this year. But if instead you bought Optimism or IMX or Polygon, you wouldn't have had such a nice time. Now with small bets, a few $100s here and there, the strategy does make sense. But for the vast majority of the portfolio, we have to take less risk. Now, the common narrative is that this less risky bet is simply Bitcoin. And while it's true that there's less risk in Bitcoin than in many altcoins, the price can still go down by 77%. So what can we do? I think the answer lies in taking advantage of crypto's market structure. Most altcoins underperform Bitcoin most of the time. So for example, have a look at this again, right? This is the performance of the top 100 cryptocurrencies in the last year. Again, SPX 6900 outperformed everything else. And here at the bottom, we see Bitcoin. So in the last year, Bitcoin appreciated by almost 72%. Now, how many altcoins outperformed Bitcoin? It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Out of 100 altcoins, 17 outperformed Bitcoin and all of the others underperformed. And so with a larger part of the portfolio, we can take advantage of this market structure. So instead of buying Bitcoin, we can buy this here. Now this is the exact same time frame that we see in those charts. And what we see here is again a Bitcoin chart, but it's slightly different. It's not Bitcoin relative to the US dollar, it's Bitcoin relative to Balancer. So what we are seeing here is Bitcoin's relative performance to one of the altcoins, an altcoin that tended to underperform over the long term. Now, why do we see that constant outperformance of Bitcoin over the alts? So it's not just that most altcoins underperform, it's also that the underperformance tends to be rather constant. The reason for this is tokenomics. It's an expanding token supply. Because that's how the venture capitalists and the members of the teams of all those projects make their money. They've got a vesting schedule. They get a token allocation, but they can't sell directly. They have to sell over time, and that depresses the price relative to Bitcoin. Yes, on bullish days, everything is going up. But when we zoom out a little bit, most altcoins are not doing as well as Bitcoin. Now, this is not common knowledge, but we can actually set up a position in a portfolio in a way that we make money when the relative performance of an asset versus another one is going up. So we don't have to bet on the crypto macro. We don't have to bet on Bitcoin going up or down. We can just make money when something outperforms or underperforms. Now, I've made several tutorials on that topic, how to profit from falling prices or gaining from relative valuations, or over here, how to win in bear markets by shorting altcoins. Now, it's not important what the macro is doing if we focus on the relative valuation. Again, the nice thing about the strategy is that it works in any market condition. At the bottom is again Bitcoin. Bitcoin has its massive crashes, and the largest retracement that we saw in this chart was maybe 50%, while the gain was much, much larger. So this is an 8,000% gain in relative valuation, while Bitcoin itself only made 100%. And so I'm of course sharing my own trades as well. Check this out. This is where I opened a short position, a relative short position on the Trump token. That was on April 30th. What we see here is Trump relative to Solana. Some community members entered the short as well. And then I closed the position a few days later for a gain of 142%. Now I actually shorted Trump twice, so this was an earlier trade. And again, here are a few other trades that our community members are making. So if we set this up right, if we've got risk management and hedging properly in place, there is real risk-adjusted alpha in positions like this. And so of course I shorted the Trump token again because of the tokenomics. Over time, the Trump supply increases. And it's really important to understand this concept. I believe that risk adjusted, if you want to make large bets, not just a small bet on the altcoins that might do 100x, if you want to bet a lot of money of our portfolio, then we have to bet on something that risk adjusted performs relatively consistently. So this is Trump in US dollars. And if you just bet on Trump going down, then when the market itself is appreciating, you've got a problem, right? Over this time frame, Trump did not go down. However, Solana relative to Trump went up. So that's the exact same time frame. That's a gain of 35%. So it's all about looking at what tends to do worse relative to something else over time. And how to set up those positions is explained in the videos over here. And so feel free to check it out. It's currently $125 per month. It used to be 165 at the peak of the bull run. Now attention is still relatively low, and so you can lock in the lower rate. I will not increase the rate for anybody that's already subscribed. Only the people that sign up when everything is hyped, they will get the higher price. But if you sign up now, you lock in that price. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. Feel free to also check out Premium. Again, the link should be somewhere over here. You can just click on the link here. It should bring you to the website. And so yeah, see you next time on YouTube or see you in Premium. Cheers.